It's the last day in the month of January 2023. So, 2023 is officially old. No more Happy New Year. Good morning and welcome to Business Morning. Another round of 55 minutes that's packaged to bring you current and relevant business conversations. I'm Ini John Mekwa, and we head right into it now, doing a countdown. Now, Naira countdown. This would have been the final day to spend those old notes, but the central bank had extended it by 10 days. That means that the old Naira is still legal tender for the next 10 days, ending on the 10th of February. And we're still collating your new Naira experience here at Business Morning at channelstv.com. That's where to share your Business Morning experience. Now, there's some disturbing stories. I've had first-hand information with some Nigerians who say they've had to pay to get the new Naira. So if you want to get 5,000 Naira, you'll be asked to pay 5,500 Naira. Well, we do hope that the central bank will get on this and deal with it. Mostly it's with the POS people that we have in our neighborhood asking that people pay for the new Naira before they are given. So please, we do know that in the midst of scarcity, there are a lot of manipulation, but let's keep sanity in this environment in one way or the other and not make things even worse than they are. So we expect that the Central Bank of Nigeria would jump on that and deal with this issue of people having to pay to get the new Naira. Other issues now, commodity market. Ukraine has exported almost 26.3 million tons of grain so far in 2022-23 season, and that's down from 37.9 million tons exported by the same stage of the previous session. Agriculture Ministry data has this captured. The volume includes about 9.4 million tons of wheat, 14.9 million tons of corn, and about 1.8 million tons of barley. The ministry said that grain exports so far in January had reached 3.5 million tons as of the 30th yesterday, and that's down 5.5 million tons in the same period last year. We do know that the war in Ukraine is about a year now, and is after almost 6 months blockade caused by Russia invasion. 3 Ukrainian Black Sea ports were unblocked at the end of July under a deal between Moscow and Kyiv, brokered by the United Nations and Turkey. We are in Nigeria now. Nigeria's external and domestic debt rose by 2.84% to 44.06 trillion naira in the third quarter of last year, from 42.84 trillion naira level reported in the second quarter. According to this latest report by the National Bureau of Statistics, it comprises the debt stock of the federal and all state governments as well as the FCT. The report shows that the country's external debt climbed by 38% to 17 trillion naira, while domestic debt was higher by 61%. 26 trillion naira. Lagos recorded the highest domestic debt of 877 billion naira, while Jigawa State had the lowest debt at 44 billion naira. Oil space now. Prices extended losses on Tuesday as the threat of further interest rate increases and continued Russian crude flows cancelled out demand recovery expectations from China. March Brent crude futures fell 5 cents to $84.85 a barrel, while the more heavily traded April contract fell by 32 cents to $84.18 a barrel. U.S. West Texas Intermediate crude futures slipped 33 cents to $77.57 a barrel. The demand outlook is still uncertain as Russia's exports seem unaffected by sanctions, and that's despite China's reopening. Investors expect the U.S. Federal Reserve to raise interest rate by 25 basis points on Wednesday, with a half-point increase by the Bank of England and European Central Bank following the following day. Higher rates could slow global economy and weaken oil demand. Back in Nigeria, the long queues are getting longer. I don't know about your area, but it's a common sight. But not just in Lagos, also in states like Edo and the Federal Capital Territory. And this is in spite of promises by the NNPCL and, of course, the upstream downstream. They've been working on this. They've made a lot of visits, but we still see those queues. That's why some residents in Edo State took to the streets yesterday to let out their discomfort and annoyance about this.
Kings Square, Benin City, also known as Ring Road. The civil society groups muster here for the protest against the price and scarcity of fuel. The march takes them to the State House of Assembly, demanding audience with the Speaker of the State Assembly.
Whatever product that is due for a State is diverted to the independent marketers. That is why the scarcity in Edo State is hitting us so differently from other states.
Government House next stop for the protesters. Things got a bit heated up here as they approach the gate. They're eventually met by officers of the state government.
We got in touch with a couple of you yesterday. Immediately we got information from the NNPC that they were going to spend fuel into Benin. They were going to supply us today.
Out there at filling stations in Benin City, the price per litre of fuel ranges from 180 naira to 500 naira. Here at the NNPC mega station at Saple Road in Benin City, the price is consumer friendly. Little wonder the queue of cars is extended. This lady has been here for hours and hours to get fuel.
How long have you been on this queue today?
More than 6 hours.
At this other station, they sell 500 naira per litre of petrol. Motorists in Benin City are hoping the situation with fuel availability and price is resolved soon. Osaze Obaze, Channels Television News.
Well, not a pleasant one, and I think anyone who drives a car, enter a bus, feels this pinch. There we see in Edo State. I know here in Lagos, mostly what you see displayed on the screen, not what you pay, is 184 naira. Even though when the media ran with the news that the official price is now 184, we did see that there were denials. But what we see in most filling stations in Lagos is 184. But we have as much as 500 naira there in Edo State, and this has been going on since last year, at least since November last year, and we're now going into February. Not a good one, but let's hear what Bolanle Agbaji has to say. Senior Associate with Financial Derivatives. Bolanle, good morning. You always see the good side of this, so please help me see, because I've been buying petrol for about 300, 350 naira, and the queues are not getting any shorter. I mean, even when I was coming this morning, sometimes you have to get other routes, you know, to get to your destination. Because also, even when you spend so much money to buy fuel, you know, petrol, then you still have to deal, you know, spend most of it on traffic.
Yes.
Because of the queues.
It's ridiculous. I find myself, you know, in traffic and wondering why I'm here, because in the next few days I have to be queuing for fuel again. It's a really trying time for Nigerians. Unfortunately, it's not necessarily good news today. I'm not in the happiest of moods, but
you know where your optimism comes?
Yes, and there was something I saw in the newspaper yesterday. It's like Nigeria, country of queues. I found that very interesting, and I just find myself queuing for everything.
Queuing for the new naira,
you know, PVC, the fuel queues. It's not ending for us, and it just seems like this is probably going to go on until, you know, the elections, and hopefully something comes out of it. Although Moody's, you know, released their report, and they did mention something very interesting. How long would it take, you know, post-elections for the policies to, you know, come into place? So
because there's always that time lag.
There's always that time lag between when a new administration comes in and the new policies policies set in. So it seems like Nigerians are going to be tried seriously for the next few months.
So what is at the bottom of this? I know you're not in the petroleum sector, but I mean, you have your eyes and your hands in a lot of places.
There are a lot of reasons that they've come out to mention. Some of the associations have mentioned the issue of smuggling, the fact that, you know, there's this price arbitrage between Nigeria and some other neighboring countries, and it seems to benefit some of these marketers to sell oil to, you know, some of those neighboring countries. There's also the issue of the fact that, you know, they're repairing a lot of those roads that the tankers usually pass, and so there's wasted time when it comes to transporting the fuel trucks to the final destination. So there's that wasted time that they factored in, but I don't necessarily think there's
also the talk of the FX.
Yes, the FX issue as well.
FX issue, getting it into the country, it's now more expensive, and the marketers are not happy with what they're buying.
It seems like they're doing this on purpose to kind of make sure that they get, you know, the price at which they've bought some of these fuel products, and also profits from it as well. Because, you know, you go into the filling stations, they've put 185. You have some people buying as high as 600 naira per liter across, you know, Nigeria. And also, nobody's factoring the money you also tip some of those fuel marketing agents within those filling stations as well.
The full attendance.
Yes, it's very difficult for Nigerians. And the fact that there's no cash as well in the system because of the change of the currency swap, and which in an ordinary, you know, country shouldn't necessarily be the case. But it seems like nobody is getting it right in terms of policies and adopting some of those new policies that we're seeing in the economy.
And Bolale, it seems like even when from the government or the leadership, you know, they're not really feeling the pain of the people. Even the people inflict more pain. I don't know if you've also heard of people being made to pay extra money if you want to get the new, naira.
So that's what necessarily happens when the system is not getting it right. You know, you have all these agents coming in to benefit from it. In every, you know, in this ordinary situation, if the banks were, you know, operating at optimum level where there's enough cash and, you know, going to the ATMs is not a struggle, the POS agents wouldn't have any, you know, they wouldn't be able to benefit from, because nobody will be buying from them if it's easy to just walk into a bank and change, you know, your money.
Just like the FX, where we now have the black market thriving because you don't have enough supply.
Exactly. So it's a no-brainer for some of those agents. I'm not surprised that that's what's happening, because even those agents are suffering in the economy. The economy is not great for anyone. So everybody's looking for the best way they can, you know, put some money in their pockets.
But you see, those agents get this money from somewhere. Does it mean the banks are the ones selling it to them, so they have to pass it down?
It's sad
because
to say,
you know, the CBN did insinuate there was something like that was happening, that the banks have the new notes.
Yes, and you know, it's possible that, you know, some people in those, you know, in those banks are trying to also benefit from it and sell to, you know, the POS agents and also, you know, get some money out of it. It's sad to say, but it seems like the banking system is compromised to a certain level, and obviously that just happens when, you know, at that, you know, top level there's no policy implemented properly, and there's no repercussion for, you know, not doing the right
behavior.
Yes,
so the central bank really has to get on this. I know I spoke to an official before coming on the program to tell them, guys, this is what is happening.
Yes,
you know, they are now charging.
They know what is happening. It's
okay, let's assume they didn't know. I did make a call this morning to tell the central bank that this is what is happening. Please, guys, get on it, because Nigeria is our country. We cannot afford to let everything
be so difficult.
There was a story from a Kenyan newspaper. You did say that was in Nigeria, where they said Nigeria a nation of queues. From Kenya, they are now referring to us, the giant of Africa.
Yes.
Do you understand? As a station that seemed not to get its right.
Yes, and going to Kenya, you would actually feel that, you know, more or less stigmatism when it comes to looking at Nigerians. They just believe that Nigerians always try to find a way to, you know, cheats the system, and they more or less feed that to us, and it's not necessarily great, but hopefully we can find.
But can Nigerians survive this till the elections?
funny thing
because
is,
I mean it's common knowledge now. One of the presidential candidates saying it's a strategy to sabotage.
There is also the talk of the political, gain from doing this. But in actual fact, leading up to an election, it seems natural that the current administration will more or less take that laxing perspective, and by the time the new administration comes in, after some time, it picks up again. So we do hope that this is just what's happening at this point, and in the next few months things start to stabilize. Till the end of the year.
I do hope that this will also be a motivation to a lot of Nigerians to go out there and vote wisely, because there are a lot of
and withstand the queues to get your PVCs.
Another queue.
Yes.
Okay, all right. Well, we see it globally now. Brent falls by 1.63%.
Yes.
I don't think Nigeria is feeling some of these falling in Brent or WTI. We're in a world of our own at this time.
Yes, you can say that, but we definitely are, because it's definitely affecting our pockets as a country. Although our oil production is not necessarily great, so I'm sure that's why
recovered.
We had recovered, but it seems like we can do much better. Like, we have the potential to do up to about 2 million barrels.
Yeah, we're supposed to 2.2 million.
Yes,
actually.
And we're not, scratching that surface. But all in all, the price of oil is declining at the moment, just because we're seeing that uptick in Russia, and also the fact that there's that expectation of a hike in the federal rates, and obviously there's an inverse relationship with that. Once you see a hike in the rates, it affects oil demand. But on the good side, we're seeing a pickup in the demand from China, and we do hope that before the end of the year it gets to a certain level that plays back into the benefits from oil prices.
Yeah, but unfortunately the uptick in Russia's oil production, or the lack of impact of the sanctions, seems to be, stealing some of those gains that other countries would have done.
The oil sanctions, the sanctions were spoken about for a few months ago, and Russia probably had time to, factor it in and brace itself for. And obviously, you have a lot of countries that are still struggling with picking up their oil supply. So Russia, filling up that gap is a welcome news for.
Yeah, and we do have a new customers for Russian oil.
Yes.
We have Afghanistan, Pakistan, all those enemies of the West turning to making it enemy of my enemy.
It's almost like a political.
Exactly. So it has that instrument.
So we always knew Russia would definitely have, some of those countries on its side. So it's going to be hard for those sanctions to bite hard. But I'm sure as time goes on, because there's only so much Russia can do in terms of produce to a certain level. Once they hit their max, and that's it. Saudi Arabia is one of the biggest, oil producers, and I don't think anybody can surpass them at the moment. But Russia is currently benefiting from it, but as a result, you're seeing a fall in oil prices. But it depends. When oil prices fall to a certain level, then it doesn't become as profitable for, Russia, and it wouldn't make sense to keep producing, at that point.
But they're already selling cheap, compared to
they're already selling
global prices.
Yeah, but they will definitely still hit their cost, and it will become, not profitable for them at some point.
Okay, all right. And then the gas is still going down.
Yes,
liquefied natural gas.
Yes, although we saw an uptick this morning, and although it's not that significant, but the fact that we had better weather than expected, and we still have actually the Eurozone, they had already built their inventories to a certain level, but at some point during the year they would more or less need to restock. Although we do.
So you think by then it might go up?
It will definitely go up again, but it just depends for how long the uptick in price would be. Although I think now the expectations would be that they would use about 50% of their inventory, so they'll need to replace that.
That's a lot, 50%.
It's a lot, but last year it was way more than that. Yes. So this year hopefully we shouldn't be.
But they seem to be escaping that recession, because even IMF, they've toned down and increased outlook and said that Europe might escape that recession. You can't say for the UK.
Yes, the Eurozone, sentiment has also increased as well. In January, it's increased to about 99.9%. So it's more more or less their consumer confidence, index type of thing. And the expectation was that it would increase to about 98%. And so they're doing way better. But, like the West, once, they're faced with any problem, they hit on it very hard, and they do the right thing. And the economy actually follows suit, unlike what we're facing in Nigeria, where you have so many agents that are drawing, the country back down.
And like we don't have that intentional solution to deal with issues, unfortunately. Well, we have mid-crop harvest to overlap main crop harvest because of early rains. That should make crops cheap, yes?
Yes, so for cocoa, it should make it cheaper, but right now we're seeing prices increase to about $2,664 per ton, which is great for us in Nigeria. So usually the main crop harvest starts from September and lasts till about January, February, and then the mid-crop harvest starts in March and lasts till about June. So right now we're seeing the mid-crop harvest, start at about now, which is great. So it means that the supply for cocoa would increase significantly, and that's due to the heavy rainfalls. So right now, as prices are still high, it means that Nigeria is, ready to benefit about 600 million naira from that.
But as you said, we still have room for improvement,
yes,
because when we look at the last time we looked at those states that are supposed to and how much they are producing, when we talk of cocoa, we saw there's a lot of shortfall.
The potential for cocoa ordinarily, like what had happened in the 60s, is about 460,000 tons. Right now, we're only in the 200,000 region, and obviously there's room to grow, but the agents, the private investors that are in that field, the motivation, the tax environment, the policy environment, all of that keep deterring investors. With the Moody's downgrade again, we have a lot of investors leaving, the country.
And mentioning that Moody's just, makes me sad.
It's really moody.
Very moody, because we've already seen our Eurobond getting more expensive.
Yes, it's even going to get much more expensive. It seems like the downgrade has even done much worse than it should have. Obviously, you have the release of that, but your debt servicing cost is going to increase even more with the downgrade, and it's not necessarily great for us. But we do hope that the tax environment, or the increase in tax, and also the revenue we get from the non-oil sector would increase over time.
Yeah, it should increase. I mean, we talked a lot about the 2022 finance bill, and we see new taxes, but of course that also has its own adverse effect, because a lot of businesses will now be squeezed, and it might affect employment.
And even you do have a lot of investors that have invested in private businesses as well, also leaving because they're not also sure about what the tax environment is about.
And the election too is also something that gives a lot of uncertainty. Investors are like, let's hold on and see what's going to happen, if the country will survive the election, and how the environment will look.
So our outlook is that, everybody is looking towards the end of this year, when everything can actually stabilize, and then we can focus on what the country actually needs in terms of infrastructure, in terms of education, in terms of all those areas of the economy that would actually boost the growth in the long term.
Okay, so we've talked about cocoa. What else is happening in the
so in the domestic commodities markets, we're seeing prices actually decline. We saw that with our inflation numbers, and we do hope that that particular downward trend continues. And obviously in January is the trend to see prices taper down after the December festivities. So but it's great news for us at the moment, although that is not contributing to energy prices at all at the in the current period. So that's all that's happening in
I wonder what the inflation numbers will look like for January, when we factor in the energy, all these queues and manpower that is lost. And
it'll be good to wait and see what would happen by the time we collate all those numbers.
I'm sure it will justify the MPC stance that that drop we saw in December was just transient. Nothing.
Yes, definitely, because the inflation is still at record high levels, so it makes sense that interest rates follow suit to bring that those numbers down.
Even though some people will argue with you that you need to expand the economy to be able to handle some of this.
It's side by side, because expanding the economy takes time. It's not a short-term, solution. The interest rate is a short-term solution. So expanding the economy follows it and has to work side by side. But you don't see the effect of that immediately.
All right, Bolanle Agbaje, Senior Associate with Financial Derivatives, who is not wearing our optimism cap this morning.
Because I've been bitten hard.
You've been bitten, oh my word. I hope by the time you come on Thursday, you would have had even if a little bit of optimism. It's too short.
Yes.
Okay, all right. I'll just have an open
finished.
and you have to queue again.
Again, yes.
Unfortunately, well, this is our country and we have to do the best. And everybody cannot jackpot now.
Yes, yes, definitely.
Thank you so much. We'll see you on Thursday.
Thank you for having me.
All right, well, let's take a break. We always have to find ways to smile, keep the blood pressure not so high. But we'll have another set of conversation after this break here in Business Morning. To join us again. You're welcome back. Well, let's see if this success story can lift our spirits a bit. The Federal Inland Revenue Service has said that it generated over 10 trillion naira, in fact 10.1 trillion naira as tax revenue in the preceding year 2022, and that's the highest tax collection ever recorded in the agency's history. And it's been said that the agency achieved over 96% of its collection target for the year. Is this a testament of improved processes, or is it coincidence? We have Emmanuel Onasami, the lead partner with Cardinal Professional Services, joining us in the studio. Good morning, Mr. Ilesami. Thank you so much for your time. Should we say congratulations to the FIRS, or is this a coincidence? What happened last year?
Well, congratulations will be in order, leaping from 6.4 trillion to 10.1 trillion is actually a leap. From the oil revenue, they were able to almost double, the income from that hand, and also from the non-oil, receipt, they were able to add about additional 2 trillion, So it's in order to say congratulations to the FIRS for this, but not to say, the work ahead is still much, because if you place this, as a ratio of our GDP, it's still way far less from what is expected from a nation that really wants to survive from the tax route.
So how would we say this was achieved? Was it that the tax net has been expanded, as we always say, or was it less compromise in the system, or what really drove this increase?
Okay, so if you look at the numbers very critically, if you look at the oil, last year they did about 2.004 trillion, and this year about 4.009, So oil receipts, that could be a testament to the fact that the oil industry is a bit stable. The prices has been going up. That means players in the industry, performance also must have improved to the end that they can pay more taxes. And if you look at the non-oil receipt, that's where you can also now say, the taxman, number one, from the use of technology. Number one, they introduced the technology for compliance, and then tax collection, the tax promas, like we typically know, that has been able to help them to eliminate some discretion around compliance. The system is now automatic. When you put in your figures, your amount, your penalty, and you then pay. That makes collection much more easier from the Compliance Act. And kudos to the FIRS also. They have been painstakingly participating in the process of improving the tax environment. Year on year, we have been publishing the Finance Act, where some laws are changed, some tax rates are changed, VAT sometimes increased from 5% to 7%, in the proposal we have on ground, we're trying to push tertiary education, a bit up. Those are the kind of factors that must have also painstakingly, helped the FIRS to achieve this increment. And if you also look at it also, FIRS has been more coordinated in their approach with looking at existing taxpayers to see whether what you have actually paid in your taxes are right in the process of tax audit exercise. Well, while some people may think that their approach may be deemed aggressive, but that also may have contributed significantly to the contribution. So from the perspective of the FIRS, they have paid a bit of their cost of ensuring that this number goes up, but we need to balance things also from the perspective of the taxpayer. And one of the biggest things I want to put on the table is the fact that somebody needs to be watching the fact that our FDI inflow has consistently declined since 2019 up to now. That means that, there must be something that the government needs to pay attention to, because the tax climate is the biggest contributor to your FDI inflow in your country. And what we have seen from experience, when the taxpayers the tax authority keeps going back to the existing taxpayer, and there are a lot of data that we have been gathering in this country that shows that we still have a larger percentage of people that are yet in the tax nest. But if you keep frustrating in that sense, in quote, because that is the perception of the taxpayer, you see a situation where the tax law is not clear on the matter, but the FRS is a bit aggressive, and the body language to the global community is like, oh, the tax environment in Nigeria is unpredictable. Year on year, they keep changing the goalpost. Also, if you look at the issue of Finance Act, the FRS has been changing a lot of things in the tax environment that then makes the tax climate also unpredictable by global investors.
Yeah, I was going to make us stay a bit on that Finance Act because it is a major one.
Yep.
We've had a lot of opinion, perspective, and there's hardly anyone that's applauding some of those adjustments being done to it, because currently I think businesses have to pay about 30% of their profits as tax. And by the time you have this new adjustment, what is left? And we're talking of inflation, we're talking of, the pressure coming from running your businesses and, all of that. And then when you add this new, I think it's a good thing that the president hasn't assented to it, but we don't know what adjustment is going to be done to it, because we had business people really complain about those adjustments and additions, especially that have been brought into that Finance Act.
Yeah, you're correct. Let me just say that the idea of a Finance Act is not wrong. You understand? And yes, attack will come. So the idea of the Finance Act is that you have your Appropriation Act every year, and then tax is a major contributor to your fiscal policy, isn't it? So your Finance Act is expected to look at your Appropriation Act and what you need to adjust within your system, in order to be able to achieve the goal for the year. You understand? But what we've seen in more developed clime is that so that the tax environment can be predictable by investors, you don't on an annual basis change tax rates. You don't decrease tax rate, but you rather make the process of compliance more efficient and the process of getting more people into the tax net more efficient, such that people that are evading tax can now come into the tax net. But what we've seen, the behavior we've seen with the Nigerian government with the use of the Finance Act kind of predict that anytime the government needs additional cash, you just go the route of increasing the tax rate, or introducing additional tax, which then makes the environment look like, oh, the government is using the Finance Act as a purpose of just getting more revenue from the existing taxpayer, instead of painstakingly putting process in place and ensuring that we widen the tax net and get more people to comply with taxes in Nigeria.
So if we have this 10.1 trillion naira from 2022, what do you see in 2023? And will it reduce the borrowing? Because currently we have a 11.04 trillion naira as deficit for the budget. Do you see it decreasing, some of those borrowings, especially now that Moody's has downgraded?
Yeah, it's anybody that becomes the sheriff eventually definitely has a very critical job, to do. Moody's just downgraded our credit rating as a nation. That means the cost of borrowing will go higher if at all you are able to get. You understand? And that means that government has to look inward. And looking inward is not to say you go after those people that have been putting all the effort to comply, just frustrating them. We've seen situations where people are experiencing multiple tax audits at the same time at the expense of doing the business. We have enough data that the next phase of administration in Nigeria, based on my perspective, is that we need to do a bit of data mining and see those people that are not complying with tax so that they can start complying, starting from the leadership, starting from the political class. In this election, we've not seen the tax authority ask the politicians about their tax receipts. You understand what I'm trying to say? So these are potential areas of tax leakage that we can potentially bring into the net, and more other people around the politicians that are not paying taxes, and more businesses around the government that are also not paying taxes. So this current administration that will come in has a lot of job to doing the business of widening the tax nets rather than frustrating the existing business out of Nigeria, because we need the FDI to keep coming in.
And another conversation that goes on around taxes, what is it being used for? Do I feel the impact? Even as a business, you still have to provide your electricity, your water, your road and infrastructure. So why should I go through the trouble of even paying so much tax? Why don't I look for a way to cut corner and pay less so I can use the money and take care of those needs?
While it may sound justified, because of the reality on ground, the position of the law is still the position of the law. If you are expected to pay the tax, then you have to do the right thing as a good citizen of the nation to pay the right. And one thing we can do as citizens is to also be more interested in the system, engage the government, ask for accountability, in what we use our tax for. Sadly, in Nigeria, our current tax receipt is not even enough to service our recurrent debt, not to even talk about recurrent expenditures, talking about the civil service, that is already bloated up, and most of the infrastructural development we've seen have been done through the instrument of debt by the government, and that's why it has become very, very imminent, on anybody that gets there to ensure that we increase our tax earnings going forward.
And another conversation around that is the tax waiver. Last year it amounted to 1.8 trillion.
Yep.
Imagine adding that to the 10.1 trillion. So you're talking about almost about 20 to 12 trillion. But of course, the tax waivers are supposed to also come with some advantages and benefits to the economy. I guess it's now left for the government to find a way to balance waiving tax and still getting the tax that they need.
Yeah, so currently, the tax waivers we have around are ordinarily tied to some economic development program, you understand? So for example, your pioneer status incentive, you are bringing in technology, you are opening up a new industry, and then they give you that waiver. But the challenge is that are we tracking the results? You've been giving waiver for so long, and you are not seeing the impact. Are you not expected to review it and still see whether this is still a viable waiver to continue to give? Those are also the areas that the government and the tax authority needs to continue to evaluate and say, okay, we have so waivers on ground. How impactful have they been over the years? And do we need to cut down on some or relook the others or modify the waivers so that we can get the kind of results we intend to get from those waivers? And I think that is the way. In any environment, we have tax waiver to stimulate industry, to stimulate a particular sector that the government may be interested in developing. So it is not out of place, but what is most critical is for us to track the impact. And also looking at the road infrastructure scheme that the FRS also spoke about, as part of their receipts, is one of the good policy. Take up a road, develop it, and then we give you the tax waiver. You can see the development. So more of such schemes.
And it can stimulate economic activities.
More of such waivers are the kind of waivers that we should be looking at going forward.
All right, thank you so much, Mr. Emmanuel Onosomi, lead partner with Cardinal Professional Services, for sharing your thoughts with us this morning.
Thank you very much, Ine.
Enjoy the rest of your day.
Bye.
All right, Mr. Onosomi goes out now and comes and leaves the path for Will Ebong to come in. One good news is that because of the rate hike that's expected in the United States, we've seen market equities in the U.S. down, let me not say combo, but the equities is looking so good, almost 1% yesterday. Is this where our investors are running to?
I'm thinking, and
that's a big deal.
It's a big deal because people right now, Moody's have downgraded. We're seeing that people are dropping bonds like hot potatoes right now and probably looking for where to actually rearrange or, manage their portfolios. And equities at the moment, they have a good momentum. And so I think investors are trying to plow their investments.
And these are domestic investors.
Yes, these are domestic investors because you don't have a lot of foreign investors because of the, FX scarcity and FX crisis we have in the country. But right now, Equities are looking good. And we're just going to ride on that tide.
Let's settle with that.
The moment and just
comfort ourselves a bit
with that. So we saw equities doing a great thing yesterday. It kicked off the week on a very bullish note following bargain hunting. We saw in Airtel Africa, it was up 3.1% yesterday, added 50 naira to its share price. The all-share index advanced by 0.95% to settle at 53,000. It crossed the 53,000 level yesterday. That's a very good mark for the market. And we see year-to-date return at 3.7%, looking good for investors as well. Now, total volume traded yesterday increased by 17.7% to 201.36 million units. It was valued at 5.67 billion naira, and all exchanged in 4,332 deals. We saw Zenith Bank being the most traded stock by volume yesterday. It had about 36.76 million units traded, while Geregu was the most traded stock by value. It had about 1.79 billion naira traded. It added 60 naira to its share price, if we must know, and that gave it a close of 176 naira for its share price. Now, sectoral performance was, largely positive. Only the insurance index was down yesterday, down 1.3%, and driven by Coronation Insurance. Downtrend of over 8%. A banking index, we saw the UBA and other tier 1 banking stocks doing their thing there. Consumer goods up is up. PZ, Unilever, and Dangote Sugar propping that sector up. Industrial goods, we had Lafarge doing its thing, and that gave it a 0.08% uptake in yesterday's trading session. Now we have Onose Asotie Naolo is an investment analyst, Main Street Capital, to give us more insights and probably more expectations as to what the market may bring. Good morning, Onose. It's good to have you on the program.
Morning, Will. Thank you for having me.
Onose, we're seeing that the momentum is still strong for equities. Looking at the sentiment report we saw yesterday, we saw a 98% buy and 2% sell on the NGX. How do you feel about that?
Well, it's expected. We have seen something that is quite new. Now we know that pre-election years and election years are characterized by negative market trends. But what we saw last year was something that it wasn't normal. But then, given the scenario, where we are, as an economy in the market, we know that FPI, foreign portfolio investments, has been leaving the market, steadily for the past 2 years. Right now, the market is dominated by local players. So we didn't see, the same patterns that we have been seeing. And then we are seeing local players being a bit more strategic in their investment decisions. While we had expected last year to end negative, as it normally does, it ended with 19.98%. And if you even as of last year, when a lot of stocks were declining, the company's earnings were actually positive, and investors saw that. So what I believe we now saw, moving to the end of last year, was investors just waiting for stocks to get to bargain prices. And then when that happened, which was around November last year, we saw investors, really just get in, and then we saw, the rally that we've been seeing, so far. And we are going to continue to see that. I believe we're going to continue to see that until companies begin to publish their full year results and make dividend announcements. And then investors will now start to weigh their options. Investors who are already in the market will now start to weigh their options. Okay. But right now it's positive sentiment, because we believe that a lot of these stocks, judging by a lot of their Q3 financials last year, they are doing quite well. At least the very popular stocks, like your Zenith, your GCB, your Access, your Fidelity, a lot of those stocks are doing really well. Okay. So we expect, positive full year results. So, and then if we have positive full year results, higher chance of, dividends being paid. And so we just see investors right now excited about that and, jumping into those opportunities.
Okay. So speaking of earnings, we've seen a flurry of earnings coming yesterday. Some good numbers, but some not so good for others. Okomu Oil posted a negative net profit for the last quarter of 2022, that's Q4, but recorded a positive bottom line for the a positive bottom line for the full year. Can you tell us what drove the loss in the last quarter last year?
Well, one, you look at finance costs. Okomu Oil's finance cost increased significantly last year, at the end of last year, and also their cost of goods sold, their cost of doing business. So last year, Okumu's oil, the price of palm oil, oil palm and rubber, which are two of the main, I guess, raw materials that they used, actually skyrocketed last year. Also, if you look at their finance costs, I believe I said that, I just said that the finance costs actually increased very significantly, in the last quarter of last year. How significant? Over 2,000%. And you could attribute that to probably their, their banks or their lenders raising interest rates, because it was mostly for the interest rates on their long-term loans. So they have been a situation where, because the NPR was, increasing, the loans that they had to, service, was also increasing, which had, significant impacts on their balance sheet.
You've mentioned all this now. That's cost of credit, cost of borrowing being high inflation, currency devaluation. How much of all this of these companies priced in, and how fast do you think these companies can recover, especially for those who are experiencing a downtrend at the moment?
Well, I guess it depends really on what causes the downtrend, their downtrend specifically. If the problem is their cost of financing, then it might be a while before they can recover. If it's something else, maybe they just weren't able to get maybe as many customers or clients as they could have, then that's something that could easily be fixed with their strategy and marketing and things like that. But if it's their cost of finance, then that's going to be a problem because as we have seen, this year, the MPC has already, raised the interest rates, and even though inflation came in lower last year, that's mostly an outlier. We expect inflation to continue its upward trend this year, and if that happens, then we see the NPR might be more inclined to keep, raising interest rates. So if that happens, they're still going to have to deal with the same problems. So for these companies, you need to really find out, what exactly is getting their numbers down. If it's really the finance issues, then they might be battling that for quite a while.
So what do you think is the outlook? Because we've seen that you mentioned the inflation, the interest rate hike. We didn't see much of a reaction in the equities markets, in the equity space. Investors are probably already priced in that. Markets have already priced in that. And so they're just moving on, even though there's going to be more interest rate hikes, as you've mentioned. But what do you think is the outlook for this week and probably the month, as we're just going to go into the election month? What do you think the outlook will be like for equities?
Well, I think for this month, equities was going to end positive. Now, if you look at the week-on-week performance for the past 4 or 5 weeks, you see that while it has been positive, it has been slowing down. So for last week, week-on-week, I think the market performed like 0.08%. Before that, it was about 0.16%, I think. And 3 weeks ago, it was about 2%. So while people are buying, they're beginning to buy at a slower pace. Now, the election is sort of a big asterisk to the market. Now, luckily, I think, or I believe right now that the full year and dividend expectations, right now will trump, I guess, political jitters in the short term, or at the very least for the month of February.
Okay.
Now, what is going to happen long term will probably be dependent somewhat on the policies of whoever wins the elections.
Okay.
But for February, I still see that the market doing well. Now, there is one thing I should mention. When we begin to see full year and dividend results, then we'll begin to see definite movements in the markets, and it could be definitely positive or definitely negative. For example, if Zenith comes out and they say, okay, this is how we did the full year and this is our dividend, then investors will kind of look at the dividend yield and start asking themselves if it's worth staying in the stock till the qualification date.
Okay.
If it's not, then you see people beginning to sell. But if it is, then you see people stay in, and some people might even buy in. So then you
we'll watch out and see how investors react to the earnings result and what they bring out, and hopefully it's going to be positive and they're going to stay in the stock. Thank you so much, Nasser Sotier Naholo, investment analyst, Main Street Capital, for sharing your insights with us. So, Ini, Just ending with the wrap-up of the treasury bills and the bond markets, still bullish. Yields are still trending downwards, and more buy interest, and so a lot of money trying to chase fewer instruments. So we're going to continue to see that.
Well, we'll have a lot of activities there, obviously, because we know that should be a major platform for funding the budget. The deficit of the budget. All right, thank you so much. All right. So we move from one market to the other, and Laddie and Will are almost like saying hello on the way. Oh no, I think the two markets are struggling from the same stream of income. So
exactly, yeah. But you know, we saw greed, yesterday, which was a good thing. We've not seen that in a while, but we've lost that now, but.
I think we're waiting for the Federal Reserve's decision.
That all eyes on.
And we're expecting 25 basis points. That's not so bad. Not
so bad. But we know how these markets, get really volatile when it's time for the Fed to speak. So now we're seeing a neutral, back to neutral from greed. We had greed yesterday with 51 points. Saw that pullback with the price of Bitcoin, lost that 23,000 level. If you look at the market cap right now, it's $1.04 trillion. It's down 3.60%. And we see volume traded up 15.17%. That's on what the sell pressure we're seeing, 15.17 there. Bitcoin dominance, 42.35%. Let's look at the price of Bitcoin this morning, $22,820. Lost that 23,000 level, down 3.83%. We see investors there getting a little jittery in the market, looking out for what the Fed is going to do next with their rate meeting. Volume traded $26.86 billion, and we see Ethereum also losing out there, down 4.21%. Could be profit taking though, because we've seen Bitcoin and Ethereum rally a lot, and most of the altcoins too had a good run in January. Let's talk to Olumide Additional, our financial market analyst. Hello, Olumide.
Hello, Laddie.
Yeah, great to have you, Olumide. So, we've seen a pullback. I feel like it's expected, because the Fed is going to raise. They're going to raise rates, for sure, 25 basis points. That's what we're expecting. But this pullback we're seeing, is it a sign of things to come?
Yeah, Laddie, if you look at today's price action, it tells you that market risk-off sentiment is taking its toll. You see gold down by 8%, and that also trickles to risky assets, including stocks. Having said that, the US dollar is running 1 week high, and that's the expectation that, yes, the US Fed will keep its mandate on keeping inflation at bay. A lot of argument is that, well, a 25 basis points increase might look dovish in approach, but investors are also concerned that the US Fed still has a sizable amount of balance sheet. In fact, the latest data suggested that it's about 8.5 trillion, and that definitely will weigh in when the US Fed starts mopping up liquidity. Now, if you look at price action, the odds have been with Bitcoin in January. This is the best month since a decade. And the fact that it has posted 40% in gains this month tells you that the bulls are expected to break around the $25,000, maybe in Q2. But still, having said all those things, you also need to understand that it's very wise for investors to be very cautious, because you don't bet against the US Fed. That's the cardinal rule. And the fact that mopping up our liquidity has kept a lot of investors selling their risky assets. You saw Tesla down more than 6% yesterday, Coinbase also. So I think it's really going to weigh on the market. But coming back home, I think Nigerians are buying these assets at premium. Latest data will tell you that the Nigerians buy Bitcoin and other altcoins at P2P rates. And that just tells you that the interest is still aggressively high. We are coming to an election era. Some major candidates have spoken about the crypto market. That could also change the all African important crypto space and bring in more innovation, because right now the market is still evolving, Laddie. Okay.
All right, Olumide, before I let you go, next month, February, is Valentine, and we know the color is red. What are you expecting? What color are you expecting for the crypto market in February?
Yeah, I think I'll say I'm very cautious, because the fact that Bitcoin against dollar had a 40% month gain, I think it will not repeat in February.
Olumide, choose a color. I just need a color, Olumide. I need a color.
Yeah.
Red.
Well, I think it will be pink. I think it's
pink. All right. Thank you so much, Olumide. Thank you.
Laddie, I'm sorry. I couldn't help that. That was cheating.
So pink is
that was cheating. What's pink? Is that neutral or is it positive?
I don't know where it takes pink, but it seems like something might be good and bad at the same time. All
right, Laddie, thank you so much for giving us that. Right. Well, that's it on the program today. Thank you so much for being a part of it. Do remember, Will Ibong will be back at 1:30 p.m. for Business Incorporated. You get update from the world of business. We've done 110 minutes already this week. We have 165 minutes more. I'll see you tomorrow. I'm Mini General.